Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me is Shrishti Sharma. And this is the show where we take you through all the stocks that are buzzing away in trade or not, on the back of either news flow or on the back of technicals. But first up, let's see how the markets are shaping up. Shrishti, it's a somber day. It's a somber Monday coming in on the D Street. In fact, Nifty has registered its single biggest session fall in the last 1 month, and it's a one-way slide for the markets.
Well, certainly, Ankita, and the key to note is that there's been no substantial recovery from the day's lowest point, and hence that weighing even more on the benchmark indices, and even the broader markets are participating very much in this particular fall. That's India Wix, that is up around 7.5% in today's trading session. At one point in time, we have seen that surging more than 10% as well, but there are just a handful of stocks in Nifty 50 that are holding on to the shade of green, from the likes of Mahindra and Mahindra, Tech M, Cipla and Dr. Reddy's. Just 4 counters on Nifty 50 that are in the green. But on the flip side, the fall has been very sharp in the auto counters after good auto sales data. What these investors are fearing is that now the sales are done, now the discounts were higher, but going ahead in the lean period for the auto sales, how the numbers will pan out. So not much excitement on that front. Hero MotoCorp, Bajaj Auto are some of the top losers. Other than that, that's Reliance as well that is weighing heavy. 3.5% cut coming in on Reliance Industries as well. And all of these ONCs, especially related to the energy basket, from the likes of BPCL, Coal India, ONGC, they are all seeing a cut of more than 3% in trade right now. So all in all, not a great day coming in for the benchmark indices, and even the broader markets from the likes of mid cap and the small cap indices, they are also trading near the day's lowest point.
Absolutely. So, somber day of trade coming in on D Street. But with that, let's get started with all the stocks that are in focus today. And for that, we have Foram M.Chheda, who's the founder of Chart Analytics on the technicals. And from our research team, we are joined by Ansh. Hi, good afternoon to you both. Let's get started with all the stocks that are in focus today. Of course, one name that is in focus today, and that is Sun Pharma, which is in focus on the back of the fact that the US court has stopped Sun Pharma from launching Lex V, on August 1st. Sun Pharma informed about the motion seeking a preliminary injunction file in a US court to prevent the launch of that medicine. And of course, on November 1st, the US District Court of New Jersey decided to grant a preliminary injunction, delaying the launch. But as a result of the court decision, Sun has now been stopped from launching it until a subsequent favorable court decision, or until the expiry of the patent is, in the lawsuit, whichever comes earlier. A couple of brokerages also that came out. UBS says that the preliminary injunction is not the end of the opportunity. Settlement is still one of the possible options, and the grant of PR implies, the insight could extract more value in a settlement scenario. JP Morgan also says that, Sun Pharma plans to file an appeal against the judgment, and of course, they could, also look at the settlement with the insight to expedite the launch of the medicine. On the back of this news flow, Sun Pharma is down and out in trade, trading with cuts of 3%.
Alright, that's the news flow around Sun Pharma. But moving on, let's put the spotlight on Ashok Leyland, because this stock is in focus on the back of the sales data. Because this time, if we talk about the kind of sales data segment-wise, then that's the commercial vehicle segment that was the weakest link in all the numbers. And for the likes of Ashok Leyland as well, there's been a double-digit decline on a month-on-month basis. Sales down about 11%. 15,310 units is what the company reported, and that's even lower than our ET Now's estimate. Other than that, on a YOY basis too, there has been a fall of 9%. So all in all, not a great set coming in from Ashok Leyland. The commercial vehicle segment as a whole is seen to be under pressure. But yes, indeed, there has been a disappointment, and hence we can see a cut of 1.5% on stock.
All right, coming to you then, Forum, you've picked out Infosys for us. Now, this counter, it has been in a consolidation mode for the last 1 month. Tell us, is it likely to, now break the consolidation move? Do we see an upside on this counter?
Hi, good afternoon, and thank you for having me on the show, and season's greetings to all of you. Well, to begin with, on Infosys, as you rightly made a mention, that it has been consolidating from the past 1 month. So let's just check a little bit of the historical data. That since June, the stock price has seen a very good rally since the levels of 1360 to nearly 1990 levels, and it was nearly more than 40% high. And in the past 1 month, or maybe less than a month, maybe would take around 15 days or a little bit more than 15 days trading sessions, we have seen a bit of a decline or a consolidation, as you rightly made a mention. We have seen nearly 13% odd decline. But so from the levels of around 1990 to around closer to even 1718, the 1780 that is today's low, which was like a gap down by around 2%, we have seen a recent recovery as on today, considering today's trading session. However, I would suggest that whoever has Infosys can continue to hold on. Who is looking at buying Infosys, I would suggest that consider like buying maybe around 20 to 30% of the total allocation that one intends to look into Infosys, and add it at a very important level of around 1678 levels, which is almost like a 50% retracement of its entire rally in June from 1300 levels to around 1990 levels. So it's a very safe level to add in at those levels. However, somebody who has can look at holding on, because we are seeing a bit of a rebound towards 1800 levels. So according to me, watch out for buying a small quantity as of right now, and can add in at lower levels of around 1670.
All right, that's the take coming in on Infosys. But moving on to Narayana Hrudayale, coming to you, Ansh, tell us, this company has reported its Q2 numbers. Take us through how the numbers look like.
Yes, so despite their revenue going up by around 7% from that 1305 to 1400 crore, the net profit has actually come down by around more than 12% actually, from 226 crore to around 198, 199 crore. If we talk about EBITDA, then that has been flat, and if we talk about margin, then that has actually come down from 23% to 22%. So overall, on the back of this, we are seeing that stock is falling down because of the weak numbers. Also, if we see on chart, then the stock has actually touched its 3-week low level, and if we compare this with September highs, then stock is down by around 12 to 13% today.
All right, that is Narayana on the back of its Q2 results. But coming to you, Foram, SBI is the name that you have picked out for us. Tell us what do you see in the charts for this one, because this counter hasn't really moved much. Is it time that this PSU banking name starts to give results?
One is that we have seen a bit of an underperformance overall in some of the PSU banks. Now, if we talk about it this year, SBI was in fact facing a lot of resistance near 770 levels till April, like from Feb to April. Post that, we saw a good upside momentum towards the levels of 912, which it marked like a peak in the month of June. And then we've seen a decline of nearly around 16% from its highs. So it has been again taking support at the same levels of around 770 to around 765 levels, and very close to the 200-day moving average. Post that, we have seen the stock price consolidating. So from an investment perspective, and being like a blue chip or a large cap company, it is a safe level to even invest at these levels, and one can focus for lower levels of around 790 also, which one can look at adding in or accumulating. So overall, the stock price remains in a consolidation, so it's absolutely more like an investment buy. Since it's into a consolidation, and it can pick up momentum only once it crosses the level of 832. Till that time, one has an opportunity to keep on accumulating in small tranches.
All right, with that, it's time for us to slip into a short break. Don't go anywhere, because we are getting you more stocks after the break.
Welcome back to Market Fatafat, and moving on to some updates from the primary market. Niva Bupa IPO opens for subscription on Thursday. But what's the growth roadmap for the company, and how does it stack up versus its retail health insurance peers? Let's listen into a slice of the conversation my colleague Anurag Shah had with the management of the company.
The main objective of raising this 800 crore primary for the company is to make sure that we have the resources to continue our journey of growth, to continue to invest in products, in distribution, in talent, in technology. We believe that this 800 crores will enable all of that. It will enable us to become self-sustaining over time, and it will take care of our solvency requirements through this journey.
So solvency and expansion, the 800 crore will be used for the both, sir.
That's correct.
Yes, sir. So just want to understand, if you talk about the valuation, there is a one listed player to compare with, and at the price to book value, it will be around 6.2. So don't you think that valuations are expensive, because as compared to the another peer, they are more in the market share, the premium is as compared to your premium, the premium is also around more than 2 times. So don't you think the valuations are little expensive?
So, Mr. Anurag, so first is price to book is important metric, but not everything. So you need to see all these financial metric in conjunction to each other, and most important is growth. So we have been growing at significantly above market growth rate, and because of this there was a strain in profitability and combined ratio, expense ratios. These are showing very good improvement in last few years. So valuation has to be seen in whole context, and this is the valuation which our bankers have guided us towards, and something which is a fine balance between what existing shareholders are getting as well as what is the return incoming shareholders can make. And this is the same value at which Bupa bought shares from True North January of this month, so almost January of this year, almost 11 months back. It is the same price. So in that sense, it is a good value what our bankers have guided us for incoming investor.
So after the IPO, how the shareholding will change for the company and reach up to the 74% of the FDI limit? How much scope there will be there for Bupa?
Given the strong interest we have seen from FIIs, we believe that there's strong FII interest in the issue, and Bupa has agreed to bring down their shareholding so that we stay within the 74%, but are also able to accommodate FIIs coming in as shareholders.
Okay, sir. And sir, going ahead, what will be the target for your combined ratio from present level, and by when you intend to reach 10,000 crore mark for your premium?
So on combined ratio, on both your questions, Anurag, I'm not in a position to give you forward-looking statements, but what I can give you are analogies that will be useful. So Bupa combined ratio in many of their mature operations, steady state, whether it's UK, Australia or Spain, combined ratio ranges between 92 and 94%. And if you look at the Indian market as well, right, our competition on standalone health has demonstrated combined ratios which are sub 95%. So I think steady state, that is what you can expect from Niva Bupa, 95, sub 95 on an Indian GAAP basis combined ratios. In terms of your question on, how soon will we reach a particular number, look, all I can say is we're very excited about the opportunity and we invest and we believe that we will continue to grow faster than market.
All right, that was the management of Niva Bupa. But moving on, and let's get back to all the stocks that are buzzing in trade today. And let's put the spotlight on Bajaj Auto, because this company has been one of the losers in Nifty 50 today. And the reason is quite simple, is the auto sales data for the month gone by. Because for the festive season sales, when we see the peers like Hero MotoCorp, TVS Motors, Eicher Motors, Royal Enfield, they're all touching the record high levels in terms of sales for the month gone by. They're in Bajaj Auto, the sales were quite decent, but they were not at a record high levels, and maybe a bit of a disappointment coming in from an investor point of view. If you talk about the sales number, then their exports has done pretty well for themselves. Other than that, if you look at the domestic side of the sales, that also been holding up well, and all in all the company did report 4.8 lakhs of sales in the month gone by, but that's just a minuscule 2% jump on a month-on-month basis, and also on a YY basis that's a jump of 2%. So all in all, inline set of numbers coming in from Bajaj Auto, but then obviously when we do the peer comparison, then Bajaj Auto is seen to be lagging a bit behind, and hence what we are seeing is the stock is seen to be under pressure, but nevertheless is seen to be recovering a bit, with the market recovering as well. But that's Bajaj Auto with a 4% cut right now.
All right, moving on from Bajaj Auto to a Nykaa that is in focus today, and that is on the back of a note by Jefferies that is maintaining a buy on the counter with a target price of 220 rupees per share. They say that they recently visited the Nykaa Land 2.0. It is India's one of the biggest, one-of-a-kind beauty festival that recently took place. It was a 3-day beauty festival in Mumbai, which hosted more than 80 brands and 1,000 plus content creators. And Nykaa Land attracted more than 25,000 visitors and as many as 4 400,000 samples were distributed. They also noted that the brands were pleasantly surprised with the turnout and the level of user engagement. Grooming and makeup habits, of course, are evolving, which makes India a key growth market for Nykaa, and the brands consider Nykaa as an indispensable partner for them, and hence they are maintaining a buy on Nykaa. But given the market breadth, the market scenario right now, Nykaa is also trading with cuts of 2.2% despite a positive brokerage note by Jefferies.
All right, that's about Nykaa. But moving on in Forum, coming to you for your next stock, and that is Mazagon Dock, because all these PSUs and especially the defense counters have seen a correction of 30 to 40% from their highs. But how do you spot Mazagon Dock on the charts right now? Are you hoping for some bit of a recovery in this one?
And you very absolutely rightly mentioned, I would say, that the stock price has corrected nearly around this industry has corrected almost 30 to 40%. Speaking especially of Mazagon, it's more of I would say now consolidating. It has corrected nearly 34% from the highs of around 5,860, which was formed in the month of July. And it formed a bottom near the levels of around 3,850 in the month of October. So that is almost nearly 34% correction. Now, post that, we have seen the stock price now kind of stabilizing and forming a base at these levels of 3,850. So those who have it can continue to hold from an investment perspective, but to closely watch out for these levels, and any breach of levels of around 3,840 can trigger some further downside towards 3,400 levels. So in case if the risk appetite doesn't suit, then they should look at moving out if it breaches those levels of 3,850. Till then, it's absolutely a hold. And since it's an investment, one can even look at these levels because the risk reward ratio is very favorable. So somebody wants to enter in at these levels will find it very attractive. So around 20 to around 30% of an investment can be made at these levels.
All right, that's Mazagon Dock on the charts. But coming to you, Ansh, Eicher Motors, another counter that came out with its monthly auto sales numbers. Tell us, what are these numbers? Are they in line, above? How are the numbers panning out?
Yes, so the stock has actually recorded its highest ever sales and all-time high festive sales. The total RE sales is up by 31% from that 84,400 mark to crossing that 1 lakh mark, touching 1,10,000 units. If we talk about total VECV, then the sales have actually gone down by 5% from that 7,486 unit down to 7,112 units. In the morning, the stock was up by around 1%, but due to market pressure, the stock is trading with a cut of around 2.5%. But if you see on chart, then the stock is falling down, but it seems to be taking break at that 50 and 100 EMA level, which is a positive sign.
All right, that's about Eicher Motors, and apart from that, the company is also launching its first electric vehicle bike in Milan, Italy. So that's also one of the triggers that we are watching out for. But Forum, let's also talk about Paytm then, because that's what you are tracking on the charts, and it's been a good recovery for Paytm from the levels of close to that 400 rupees odd levels. How do you see the stock at 750? Are you also hoping for a good move, up move from these levels itself?
Overall, I am expecting more like a side move, and as you rightly made a mention, it stabilized, consolidated, formed a base near those 440 levels in the month of I think April to July. Since then, we have seen a consistent up move, forming higher tops and higher bottoms and changing its trend also. While moving up higher, the stock price crossed important multiple moving averages of 50, 100 and 200, indicating that the underlying trend has been changing from down to now up. So it has seen a very good trend reversal. Now, since the stock price is forming or is facing a little bit of resistance near these levels of around 770 to around 765, the stock price is likely to get little quiet, or I would say more, it can consolidate towards the levels of around 700. So those who are looking at holding from an investment perspective, it's absolutely okay. But somebody who's got into from a trading perspective should watch out closely for the levels of around 700. Then in case those are breached, then we can see some further down move, which is actually more like, I would say, a retracement from a long-term perspective. But since from trading, the risk appetite is lesser, so 700 below that should be the stop loss. For investors, it is yet a hold, and one can look for an upside target of closer to around 850 as well.
An upside target of 850 on Paytm on the charts, but moving on to a counter that is in focus today on the back of a brokerage note by DAM Capital, and that's Bharti Airtel. And the DAM Capital is maintaining, in fact, they've initiated a buy on the counter with a target price of 1,907 rupees per share. They feel that the telecom industry has now reached a state of maturity. The home broadband is now on the cusp of a multi-year growth. And the B2B businesses continue to expand steadily. They expect FY25 to 27 revenue EBITDA at a CAGR of 12% and 15% respectively for the Indian businesses, and on the back of that they're maintaining they're initiating a buy on Bharti Airtel, and on the back of that Bharti Airtel is in focus, but a positive note, but nonetheless mirroring the market. Bharti Airtel is declining in trade with cuts of 2.4%.
All right, that's about Bharti Airtel. But Forum, once again coming to you, let's talk about Finolex. How do you see the stock on the charts, and where do you see the stock headed?
Well, Finolex overall, we have seen a very volatile move in the past 1 month. Now, from the levels of around 265, the stock price moved to closer to a level of around 334. And again, we saw the stock price moving back to around 280 to 75 levels. But if you look at it from the levels or from the highs of around 355, the stock price corrected nearly 25% and then formed a base near 265. It took support very much, I would say exactly near the 200-day moving average, and has seen a rebound. It did give a technical breakout from a falling trend line as well, which indicated overall that there has been a reversal or a change in trend from down to now up. So overall, the stock price has been consistently taken, I think multiple times has taken support on a 200-day moving average since October. And now we can see that the stock price is again stabilized and is getting consolidated. So overall, one can consider holding on to the stock at these levels. For buying, I would suggest to some people to wait for levels of around 290 to around 285 with a very strict stop loss below the levels of around 275. And one can look for a potential up move of closer to around 330 levels.
All right, with that, it's time for a quick breather. Don't go anywhere. After the break, we're getting you some more buzzers.
If you like this video, then like, share and subscribe to ET Now.